Hello traders, Gary Wagner here. Just after 12 noon in Honolulu, 6 o'clock in New York. It is Thursday, December 20th, 2018, and this is the Daily Report for Gold and Silver. Another brutal day for U.S. equities and a sizable, respectable gain in the precious metals, at least for gold and silver. Gold closing up $7, currently printing at $1,263.40. That is basis most active. February's contract, we did issue a recommendation to go long a little bit above current pricing. We'll talk about that in detail as we pull up our technical studies. Silver had a decent gain, gaining approximately 2 cents and is currently fixed at $14.83. Now, a lot of that had to do with a falling U.S. dollar really having a strong drop, a net decline of about 0.6%, now below 96 at 95.90. And the selling pressure continues in U.S. equities, a 464-point drop in the Dow, 22,859. NASDAQ Composite losing about 1.5%, 108-point decline at 65.28. And the Standard & Poor's right around the same, losing 1.5%, currently fixed at 24.67. Traders, typically I start the show with either a gold chart, silver chart, or maybe the dollar. But today I do want to focus on, as our first chart, the Dow Jones Industrial Average in terms of an extremely long-term view. As you can see, I've made these candlesticks be monthly candlesticks. Each candle represents 1 month in trading. I am beginning a Fibonacci retracement from the beginning of 2009, and I've drawn it up to the highest high that it traded to, which would have been October of this year. When we look at the market through the eyes of a monthly chart, what we first see is that we are actually close to a 0.23 or 23% retracement of this entire move from, call it 6,500 up to 26 or 27,000. In fact, in the last month, when we look at the high to the low, we can see that we have had a decline of almost 3,000 points totally, and really close to 4,000 points. And that, of course, in regards to a slowing global economy, but also the Fed statement that came in yesterday that was a lot less dovish than market participants had hoped for. And that also has now put pretty tremendous pressure on the dollar. And traders, we are looking at a weekly chart of the dollar index. On this chart, we can see that in the last week alone, we have lost roughly 1% of value in terms of the dollar index. But more importantly, it is at a critical level. We have been looking at support being at roughly 96, 95, 90. That is the 50% retracement. This retracement begins when the dollar index was extremely high at 104, down to these lows at about 88. When we do that, we can see that we have seen our resistance sitting at 97.76 and support at 96. A solid break on a closing basis below this particular level of support would put the next real level of support 2% away. That would be based on the 0.38% retracement at approximately 94 on the dollar index. And that takes us to gold, because gold has had a monumental move over this last week. Although we can certainly see the major move that gold has had over the last couple of weeks, it was really the action today that I need to highlight, because a major event occurred, and that event on a technical basis is the fact that for the first time since May of this year, we have had gold pricing close above the longest term 200-day moving average. We talked about the fact that the short-term 50-day moving average crossed above the 100. That occurred mid-November. We do have these two moving averages widening. We also are seeing the 50-day and the 200-day narrowing, which tells us that we could, at a later point in time, see a golden cross with these two averages. But we have some major factors right now that I believe could influence the market over the next couple of weeks. Of course, the Fed decision is important. That is critical. There's a potential government shutdown that will occur if it does later on this week. That's the first thing. The second thing is that there's been no resolution in the trade war between the United States and China. Of course, there is Brexit. And then lastly is the Mueller investigation. I've not talked about it very much, but as it goes deeper and deeper into the affairs of President Trump, we are seeing the potential for some real havoc, a real shakeup going on next year, depending on the findings of that special committee and how the current administration handles that. For right now, we have some very, very interesting factors that I believe could easily take gold pricing to 1,275, and my target for this particular move moving as high as 1,300. So I am looking at our current trade as a much more long-term trade. We entered the trade above current pricing, I believe, 1,268 and change. The market did trade to a high of 1,270 before backing off. Our stop is currently sitting well below 46. I want to keep it loose because I want this to be a longer-term trade with our subscribers. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.